Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Asian stocks extend a U.S. sell-off on worries the AI rally is ending its bull run. Dutch giant ASML cutting its outlook after booking only half the orders expected this quarter. The Biden administration warns Israel it must improve the humanitarian crisis in Gaza within 30 days or risk being cut off from U.S. weapons. Plus, oil giant Aramco shelves Saudi refinery and chemical projects as it shifts focus to expanding in Asia. It's just gone 8 a.m. across the Emirates. I'm Jemana Bersachi in Dubai. Well, we got a bit of a pullback yesterday for Wall Street, with the S&P dipping about 0.8% weaker, the Nasdaq down 1%. This despite the fact that U.S. bank earnings came in very strong yesterday, blowing through expectations to some of the majors. Goldman Sachs actually on track for its best year ever. So with that in mind, what did pull stocks lower was a disappointing outlook and sales numbers being put forward by ASML. We're going to talk about that in just a moment, but what that has done is it set the tone for trading, not just in late into the U.S. session, but the handover from the Asian session as well. A lot of these chip makers in the Asian markets also trading in the red. As you can see behind me, the Nikkei down 1.7%, and this again being pulled down by some of the key chip names in the region. Brent also back in focus again. We're trading at around 74 handle, slightly below where we were yesterday, and this as geopolitical premium continues to get wiped out from that market, as the market reshifts its attention back to fundamentals in this space and the fact that the signals coming through from China have not been so constructive as of late. So we will be talking more about oil as well on the show. But I did mention the banking index, and I just want to show this chart to you because I thought it is worth flagging how far along the KBW Banks Index has actually moved in the last year. So look at this. Just in the last year alone, we're up about 60%. But then you rewind back, and if you remember, back in March 2023, there were all of these gyrations about what was going on with U.S. regional banks, Credit Suisse, the acquisition by UBS at the time. So that big down drop in March 2023, well, we fully recuperated that and more. So the U.S. Banks Index now up 20% in the last 2 years, but up 60% in the last year alone. It just tells you that these U.S. banks continue to do well, brushing off concerns about the potential recession in the U.S. economy. The soft economy seems to be playing into these hands of the banks quite well. But Asian chip makers slumped after ASML announced it booked only half the orders analysts expected in the third quarter. Massive decline, as you can see on the board, as some of the stocks in focus in Asia also down quite substantially this morning. Let's get more on these ASML figures and bring in Daybreak Europe anchor Tom McKenzie. It's good to have you with us. So, Tom, first of all, these earnings or these results were released one day early, which is surprising in itself. But then also what they had to say was pretty negative for the market. So what did we learn yesterday?
Yeah, there will be lots of questions on the analyst call with executives later today, and no doubt questions about why that release came through a day early. But also, of course, as you say, scrutiny over what's been happening, because this set of results has sent shockwaves through the semiconductor space, as you've been breaking down for us, because they booked orders that were less than half the estimates, 2.6 billion euros. The estimates have been for 5.4 billion euros in terms of orders booked at ASML, which is the most valuable tech company in Europe and a bellwether for this sector. And importantly as well, cutting their guidance for 2025. They now see sales of around 30 to 35 billion euros. They had seen 40 billion euros. So reducing the guidance and pointing to the weakness, particularly around the demand for the autos, chips and industrial chips. The newly installed CEO, by the way, of ASML, the maker, of course, of these lithography machines, without which you cannot have our modern digital world. Christophe Fouquet said the recovery is more gradual than expected. It will continue in 2025. Customers, he says, are cautious.
Yeah, and I can't help but think about the geopolitics coming into play here, Tom. I remember the story that we were talking about just over a month ago, and the fact that Netherlands have started restricting the export of certain ASML technologies to China surely is beginning to bite now. It is having a tangible impact on the company.
ASML still gets 47% of its sales from the Chinese market. Now, the vast majority of those sales, if not all of them, do not include extreme ultraviolet lithography machines, the most high-end, the most sophisticated, the most modern lithography machines that ASML makes, precisely because, as you say, they are restricted from the Chinese market. But there is still huge demand for DUVs, which are the older models of lithography machines in the Chinese market, and the restrictions are not in place to stop those being shipped into that market. So 47% of ASML sales still come from the geopolitical hotspot that is China. Interestingly, analysts at UBS say next year ASML could see a quarter of those sales be cut out for ASML precisely because of the restrictions, growing restrictions on that Chinese market. So clearly that is a vulnerability. The other aspect of this is, and we talked and touched on this, is the customers, ASML's customers, the likes of Intel, SK Hynix and Samsung. SK Hynix, Samsung are getting more cautious, according to the CEO. Intel, of course, has put aside some of its plans, scrapped some of its plans to build out additional factories, and that certainly is a factor as well for ASML. We'll wait to see what they have to say in the analyst call in terms of the breakdown of the high-end lithography machines versus some of the older machines.
Yeah, so interesting, and clearly having broader ramifications on the industry. So big story to watch there. Daybreak Europe anchor Tom McKenzie, thank you. Now, switching over to the region, the Biden administration has warned Israel it must improve the humanitarian crisis in Gaza within 30 days or risk a cut in the flow of U.S. weapons. Executive editor for Middle East, North Africa and Russia, Stuart Livingston-Wallace, joins us now. How should we read this warning or a veiled warning from the U.S. to Israel?
I mean, I think they have to make an effort to be seen to be trying to restrain what's happening. But I think the reality is that over the last year, we know of one instance where they tried to delay the shipments, and that they snapped out of that pretty fast. And again, the question at this stage has to be, you're 1 month out from the election. Are you really going to try and play hardball with the Israeli administration? Certainly from Bibi's point of view, that is the Israeli Prime Minister's point of view, the answer is going to be a resounding no. Yeah. So I think that seems to be the state of play.
Yeah, and analysts are quick to point out that 30 days is actually after the timing of the U.S. elections. Stuart, I also want to bring, I want to ask you about a story that we put out yesterday from Bloomberg, our own reporting, suggesting that Lebanon is now poised to be put on the grey list over dirty money. So just tell us what's happening there and what the ramifications could be for Lebanon.
Yeah, so this is basically a task force, a global task force that looks at illicit money flows around the world and then basically puts recommendations out so that if you go onto this grey list, or particularly the black list, which is obviously much worse, then everyone is much more constrained and much more cautious about doing business with you. So it makes it much more difficult to get money in or out. Now, in the case of Lebanon, they're kind of already in that position in the sense that they're already frozen out of debt markets or international debt markets. We know that there is a big economic crisis. So would it fundamentally make a difference in the short term? Probably not, because that's already happening. But in the long term, it's one more headache that they have to deal with to get that economy back on track.
Yeah, and certainly has to be a focus amongst many other things that policymakers are focused on there. Stuart, thank you very much. Executive Editor for Middle East, North Africa and Russia, Stuart Livingston-Wallace. Well, for more on how the Middle East crisis is impacting oil markets now, let's bring in Vandana Hari, CEO at Vanda Insights. Vandana, good morning to you. I just kicked off the show with a brief overview of some of the volatility we've seen in oil markets as of late. And the last couple of days, what we have seen actually, especially since those reports came out suggesting that Israel is not going to hit oil infrastructure in Iran, a lot of the geopolitical premium in oil has come out. Is it fully priced out now?
Good morning, Jemana. So indeed, as you say, the Washington Post story of Monday that Israel had assured the U.S. it will not strike Iranian nuclear or oil facilities, burst the speculative premium in crude. I would say, Jemana, the slide that we have seen, especially over yesterday in crude prices, has taken off about 70% or so of the geopolitical risk premium in crude. I feel there's another probably $3 to $4 that crude could shed, which basically takes Brent back towards into the high 60s, around $70 a barrel, which I would think is the equilibrium price as the market shifts its attention back to supply-demand fundamentals, which, the story continues from before the geopolitical risk premium episode, one of, demand not looking very good, demand growth not looking very good, and plenty of supply in the world.
Yeah, so let's talk about demand. There are a couple of things that struck out to me from the reports that came through from OPEC and the IEA the last couple of days. And namely, there's a huge wedge in terms of what OPEC are forecasting for demand growth versus what the IEA see happening. 2025, just to highlight this for viewers, IEA have penciled in a demand growth of 1 million barrels a day. OPEC still have 1.6 million barrels per day penciled in for 2025. So still quite a big divide between the two think tanks. But where do you think the true number actually lies?
So that chasm has existed pretty much for most of this year. And the result of that has been that the market has, to some extent, put aside both the figures, OPEC's overly optimistic demand growth numbers, which remains the case even after the latest trimming. And the IEA is rather pessimistic. Where the market consensus has settled is closer to the IEA's number. So the IEA in its latest report yesterday further trimmed global demand growth estimate for this year to about 860,000 barrels a day. I would say the market consensus and where we are as well is probably closer to 1 million barrels per day growth year on year, which is, of course, a far cry from OPEC's number, which is still putting it at 1.9.
Do you think in this environment, given so many downward pressures that exist on oil right now, that OPEC Plus will actually still be able to carry through on their commitment to putting further oil barrels back to the market in the fourth quarter?
So, Jumana, I think the question here is, what is the maneuvering room OPEC Plus has, keeping in mind the very important internal dynamics, the fact that the current additional cuts of about 2.2 million barrels per day, that burden is being carried by just 8 members of that alliance. And, from what I can sense, they're really at the end of their tether. These cuts have been in place since 2023. Of course, OPEC Plus was hoping that they would be able to start putting more oil back into the market sometime this year, and now it's gotten pushed back all the way to December. I don't think OPEC, or let me put it this way, I think OPEC Plus really jeopardizes its internal cohesion and cooperation if it looks at further bringing back that oil. So, one way or another, I think they'll have to make peace with lower prices and, bring back gradually the 2.2 million barrels. But they have erred on the side of bringing it back very, very cautiously over a period of 1 year.
Yeah. And you've got to think about, again, the ramifications of that on these countries' budgets. But that's for another discussion. Vandana Hari from Vanda Insights, thank you so much for joining us on the show. Well, sticking to the region, the Iranian Foreign Ministry has just put out a statement saying that the foreign minister is going to be visiting Jordan, Egypt and Turkey. And this is, of course, following on from the heels of a trip that he did around the region in the last couple of weeks. He met with the Crown Prince of Saudi Arabia, MBS, the Saudi foreign minister. That was a significant meeting. Also meeting with various Lebanese officials as well. So the Iranian foreign minister continues to do a tour of the Arab region. Now, still ahead, 3 weeks out from the U.S. election, we speak to the WEF Managing Director, Mirek Dušek, about the outcome's impact on the global economy. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Republican presidential candidate Donald Trump has defended his plans to overhaul the U.S. economy by substantially hiking tariffs and consulting more directly with the Fed. He sat down with Bloomberg News' editor-in-chief, John Micklethwaite, for a wide-ranging interview.
We're all about growth. We're going to bring companies back to our country. To me, the most beautiful word in the dictionary is tariff. And it's my favorite word. It needs a public relations firm. I had a very good relationship with President Xi, and a very good relationship with Putin, and a very good relationship with Kim Jong-un.
Do you worry about that?
The dollar is so secure, your reserve currency is the strongest it'll ever be. I think that if you're a very good president with good sense, you should be able to at least talk to him. I don't say make the decision at all. Take a look at Detroit. Take a look at our cities. We're a developing nation. We have to develop more than they do.
Well, the U.S. election is just 3 weeks away, and Bloomberg Economics calls it a wild card that could have a significant impact on global growth. So for more on the outlook for the international economy and global growth, let's bring in Mirek Dušek, Managing Director at the World Economic Forum. Great to have you with us, and in Dubai, nonetheless. And of course, the World Economic Forum event in Dubai is taking place today. I look forward to heading over there later myself. We will talk about some of the highlights from former President Trump's interview with our editor-in-chief here at Bloomberg. But I guess I just want to start off by asking you how you view the state of the global economy right now. Because if you rewind back to 1 year, the major focus was on how can we beat inflation. And now it feels as though the narrative has shifted once again towards what can we do to support growth.
Thanks for having me. And as you said, I'm in Dubai at the annual meeting of the Global Future Councils, which is a gathering of experts from around the world that are addressing some of the key issues on the global agenda, including the global economy. Now, we are clearly still in a very low growth environment and also a very high debt environment for the global economy. As we all see, we are hovering around 3% global growth this year and also predicted for next year. So the big issue is really how do we get out of this low growth environment at a time when the world, the global economy, but the world overall is really in a very paradoxical state. Because if you look at it, you have very powerful forces that are kind of pushing in opposite directions. You have powerful forces that you could call one of the forces of fragmentation. You see, of course, complicated geopolitics, geoeconomics, issues like industrial policy, etc., now shaping the global economy. As you know, the IMF and the WTO would say that if we have protracted fragmentation in the global economy, it's going to cost us 7% of global GDP. So that's on one hand. But I said it's a paradoxical state, because then you have these other forces that are pulling, if you will, in the other direction, which is that we are living through a very unique period of high velocity technological advancements and innovation, and we're tracking that very closely. And so I think the big question right now is how do you crowd out, how do you decrease the drag of the fragmentation forces, and how do you really unlock some of those new sources of growth that comes with technological advancement, innovation? Obviously, a big thing is how do you increase, for example, productivity in different economies?
Yeah, so interesting. And thank you for highlighting some of the themes there. And going back to that interview that former President Trump gave to Bloomberg, he was essentially talking about the benefits of introducing tariffs, saying tariffs is his favorite word in the dictionary. Should President Trump return back to the White House, how should the rest of the world be preparing themselves for the possibility of the U.S. enacting even more onerous tariffs?
So I think if we just look at the economic geography or economic landscape overall, I mentioned industrial policy, which, as you know, was something that only a few years ago was not really even used as a word much by economists. And now it is not only used, it is also practiced. And you see that actually in a lot of geographies right now, including, for example, in Europe. If we look at the Draghi report, and the importance that that report puts on also being clear-eyed about how to do industrial policy. It also talks about, has language around trade distortion measures in certain instances. So I think we have really entered an era of a new global economy, as some would put it. And we are seeing that there is a whole set of tools and whole sets of policies that are being put on the table. We'll see. The jury is frankly still out in terms of what it does to the global economy. Some would tell you that we haven't really paid the price yet in terms of, you mentioned inflation, so in terms of inflation and other forms of really paying the price for the economic fragmentation that we're seeing, and particularly some of the economic security policies that you're seeing around the world. So some would say we have gone down that path, but we are seeing these policies being implemented, but because they are in its infancy or in their infancy, we haven't really paid the price. So we'll see what it does. We'll see what it does to trade. We'll see what it does to also, for example, tackling climate change. So the jury is still out, but it is true that we are seeing pronouncements in different geographies that would be mentioning things like industrial policy, would be mentioning also tariffs.
Yeah. Earlier today, the IEA released their medium-term forecast for energy. And I thought it was interesting here. They said that more than half of the world's electricity is going to be generated from low-emission sources by 2030. Progress towards limiting climate change is being made. Do you share the view? And, do you share the positivity that IEA are expressing this morning vis-a-vis the world's ability right now to tackle climate change?
No, to really address climate change, to help us get to net zero by 2050, as many economies are trying to do, it will take everything that we have. Let's put it that way. But of course, the energy transition is a big piece of that, and advanced energy technologies are, for example, a big piece of that. If you look at some other pieces of information coming from IEA, they also track the availability in the market of these technologies in terms of helping us actually reduce carbon emissions. And if you track their reports, you will see that actually year by year, the availability of these technologies is greater. So while, as I said, it will take all our efforts, all our tools, but of course, the role of technologies, particularly in the energy system, plays a huge role. And we are seeing, as you know, there is a great momentum right now around all kinds of technologies. We call them advanced technologies, including, for example, small modular reactors, fusion. There is, of course, a great work done around the grids, for example. So this is also something that we are actually tracking here in Dubai at this meeting, and the overall work that we do at the World Economic Forum, just to say that we are looking at this other scenario as really what we call the intelligent age. So how do you unlock these advanced technologies for more productivity and growth?
We're going to have to leave it there. Sir, thank you so much for joining us. Mirek Dušek, Managing Director at the World Economic Forum. Well, still ahead this hour, we are going to take a look at some of the top stories that we are focusing on this morning. And just to give you an idea of what some of those top stories are, starting with some of the news out of Europe today, we will just give that to you in a moment. But actually first, some of the regional news. A visit by Saudi Crown Prince Mohammed bin Salman to Cairo has sparked a rally in Egyptian dollar bonds. Long-term bonds rose more than 1.5 cents on the dollar to 2-year highs on speculation of fresh investments being pumped into the North African nation. Now, while no deals were announced, Egypt's presidency says the nation signed an agreement to encourage and boost mutual investments. And now on to a big story out of Europe that I was just hinting at. U.S.-listed shares of LVMH slumped after the luxury goods giant missed estimates in its latest results. Sales fell for the first time since the COVID-19 pandemic, hampered by slumping Chinese demand. Morgan Stanley says declines in third-quarter organic sales for the LVMH fashion and leather goods unit came in well below expectations. And you can see that in after hours, the stock dropped about 8%. So quite substantial move downwards in LVMH, clearly on back of some of the weakness that's coming through in these Chinese markets. Well, coming up, we are going to continue the conversation, and we're going to be talking about the Nigerian naira. So stay tuned for that conversation as inflation in Nigeria quickens for the first time in 3 months. The World Bank seeing a positive outlook for the currency, however. All the details next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Asian stocks extend a U.S. sell-off on worries the AI rally is ending its bull run. Dutch giant ASML cutting its outlook after booking only half the orders expected this quarter. The Biden administration warns Israel it must improve the humanitarian crisis in Gaza within 30 days or risk being cut off from U.S. weapons. Plus, oil giant Aramco shelves Saudi refinery and chemical projects as it shifts focus to expanding in Asia. It's just gone 8:30 a.m. across the Emirates. I'm Jumana Versace in Dubai. Well, we got a bit of a pullback for the S&P and the Nasdaq yesterday, despite those better results coming through from the U.S. banks. A lot of focus on what's been happening today with the chip makers after ASML disappointed both on orders to come and orders booked for the quarter. And the stock tumbled 16% in after hours today. More than $400 billion worth of market cap has been wiped off from the semiconductor space. So it is having massive ramifications on the broader industry. Today, though, futures are leaning slightly towards the green. We've got S&P up about 8 basis points. Nasdaq actually turning around, up 0.2% in futures. Brent, again, in focus. We are slightly higher today, up 0.3%. So, but some of the geopolitical premium that was priced in has come out. Remember, we were close to $80 just a few days ago. And then the Nikkei, the handover has been quite negative today. Ava will tell us more about that in a moment. But essentially what we're seeing is a lot of the suppliers that ASML works with and other semiconductor manufacturers are also selling off in the Asian session. Turning over to our chart of the day, I just want to flag to you that the U.S. banks have had a really good year and up in the past year, if you see since last October. The KBW Bank Index is up more than 60% and fully recuperating the losses sustained in March 2023 when you had regional bank turmoil and the Credit Suisse episode over in Switzerland. But it does tell you that despite all of the narratives about weakening economy, these U.S. banks continue to do quite well, both on trading income and on net interest margin as well, which is coming better than market expectations for the most part. But let's continue the conversation and check in on how markets in Asia are faring. Avril is in our Singapore studio. Avril, just give us an update on what's going on.
Yeah, we are seeing Asia stocks in a pretty somber mood today with tech dragging things down. The Asia Pacific stock gauge is down about 1+%. We're seeing it pairing some of the declines from earlier in the session, but it is really, as you say, those ASML bookings raising concerns among its fellow customers, its suppliers, its peers as well. So that is what we're seeing in the Asia Pacific today in terms of negative investor sentiment. But also note here, in terms of Japanese names, the stock ones that are down about 10%, we have the likes of Lasertech as well as Tokyo Electron performing really badly. Some analysts have pointed out that Japanese equities have been running at really high levels, so it goes to show you when there is a hint, of course, for concern, how far things can fall. Note as well how we're seeing the climb rally really in these Chinese property names as traders look ahead to a housing ministry briefing tomorrow, where hopefully we'll get more details on some of these property support measures. Jumana.
Avril, thank you so much. That was Avril Hong in Singapore. Now let's focus on Nigeria, where inflation rose in September for the first time in 3 months. Severe floods hit food-producing areas and gasoline prices surged 45%. The uptick may persuade the central bank to hike rates again, adding further pressure on consumers. Meanwhile, the World Bank says the currency is at the most competitive rate against the dollar in 20 years after it was free-floated. For more on this, Bloomberg's Njiru Ganga joins us from Kigali right now. So inflation continues to surprise to the upside in Nigeria. Why are they struggling so much to rein it in?
Jumana, a couple of things can explain this yo-yo effect. One, the flooding that you spoke about. There have been heavy rainfall, and the United Nations estimate that it has destroyed food that could feed up to 8.5 million people. Then if we look at gasoline prices, the increase by 45% is no small feat. So it has affected the prices of goods, which has in turn affected basic goods like food, ticking up food inflation. Then we have the currency that is currently under pressure. Demand for the dollar is high, yet capital inflows are declining quarter on quarter by 22%. So this is some of the factors. And the effect is being felt by the ordinary Nigerian. If we look at the index for basic foods consumed by Nigerians, prices have increased by nearly 100%, some by 200%. This is an economy where minimum wage has not been adjusted to match inflation. Then you have half of the population that live in extreme poverty. So the little income that they have is being mopped away by transport costs and food costs. Businesses are also feeling the brunt. They're dealing with low demand, and they're also dealing with high cost of capital thanks to the central bank decisions. In their last meeting, they hiked the rate by 50 basis points to 27.25%, and they're expected to hike the rate again in their next meeting.
Okay, so is that how Nigeria is going to get back on track again with these inflation figures? Is it purely going to be up to the central bank to rein it in, or are there other measures that we can expect as well at a government level?
Jumana, it's safe to say that Nigeria has done most of the heavy lifting. If we look at some of the reforms that they've introduced, one, liberalization of the FX market, because they were able to float freely their currency, the World Bank says that it's at the most competitive. So currently, Nigerian exports are very attractive to the market, and it's time to diversify from oil exports to non-oil exports. If we talk about the central bank, in the last 9 months, they've hiked the rates by 850 basis points. And the World Bank says they should keep their eye on inflation and also work on rebuilding their results so they can buffer the economy against the volatility of oil prices. There are also other changes that they've made. For example, before convergence, the rate of the Naira was 465, the official rate, while the parallel market was 700. So if we look at oil exports, the government lost 6.2 trillion. And also from subsidies on gasoline, they lost about 4.5 trillion Naira. If you couple in the money that they used to prop up the currency, they lost nearly 10 trillion Naira. So the World Bank says that the reforms they've introduced are good, are painful, but they need to stay on course for 10 to 15 years. When this was said, the room chuckled because they understand the pain and social pressure that comes from it. But then again, what choice do they have?
Bloomberg's Ndira Ganga, thank you so much for giving us the extensive overview of Nigerian inflation profile. Now, coming up, Saudi Aramco is cancelling a chemical project in the kingdom as it focuses on expanding in Asia. We have all the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Saudi Aramco has cancelled plans to build a refinery and chemicals project in the kingdom as it evaluates spending plans and turns its focus on expanding in Asia. So for more on this, Bloomberg's Middle East energy reporter Anthony DePaula joins us right now. What is behind this decision to cancel some of the plans in Saudi? How should we read it?
Good morning, Jumana. Yeah, well, basically they are going ahead with this plan to expand the technology to put more crude oil and turn that into chemicals. So right now it's a process where they refine the crude oil, get gasoline, diesel, jet fuel, all those kind of things that we're used to, and then some other products that they sell off to chemical makers who turn it into plastics, things that go into our cell phones, bumpers for cars, televisions. Aramco wants to put more crude more directly into chemicals, and that's one of the projects that they're canceling in Ras Al Khair, which is an industrial city on the Persian Gulf. They're really doubling down on that kind of technology in Asia as well, particularly in China, where they've signed a couple joint ventures. So it looks like they're pulling back from some of those investments in Saudi Arabia, where labor can be more expensive, where they don't yet have a lot of that downstream conversion industry to use those chemicals.
Yeah, I feel like there's a bit of a trend going on with some of these oil majors that you cover, and you know better than anyone here, but a focus on extracting opportunities in downstream, not just relying on upstream, which is what they've done traditionally. In a moment, we're going to be speaking to Fertiglobe, and obviously that is an acquisition that has gone through ADNOC, Fertiglobe's business, and now we talk about, again, Aramco's desire to sort of beef up their downstream business as well. Why is this the case? Why are these oil majors doing that?
Yeah, I mean, you mentioned ADNOC, well, they just made the biggest Middle Eastern purchase in Europe of Covestro. Let's not forget that the second biggest Middle Eastern purchase of a company in Europe was Sabic, which is the chemical company owned now by Saudi Aramco. They bought a company called GE Plastics, which was mainly Europe-based over 10 years ago now. So they are getting into this space to have more value from the crude that they produce, getting more products out of it. Oftentimes those finished goods sell more than just the crude oil. So they're looking at that as a way to continue using their oil and natural gas as well in products after we stop driving gasoline-fired cars so much, because we'll still be, if we're driving electric cars, we'll need lightweight components like bumpers that are synthetic. We'll still be using mobile phones. So they're really getting into this as kind of a future play towards the transition, able to continue using those hydrocarbon resources.
Yeah, so interesting. Anthony, thank you so much for bringing us that story. And you can read all about Anthony's write-up on the Aramco decision on the terminal. Anthony DePaula, Bloomberg's Middle East energy reporter. Now, ADNOC, I just referenced this. ADNOC has completed its acquisition of a majority stake in chemicals firm Fertiglobe, worth more than $3.5 billion. The deal boosts ADNOC's chemicals offerings as it sees growth in these products, outlasting gasoline and diesel demand amid the energy transition. It follows the UAE oil giant's deal with German chemical maker Covestro earlier this month. And joining us now from Abu Dhabi is Fertiglobe CEO Ahmed El-Hoshy. It's great to have you with us on the show on the back of a very big deal announcement yesterday. So thank you for joining us. You say in the press release that by consolidating ADNOC's ammonia platform, Fertiglobe is set to be a global leader in low-carbon ammonia. I'm just curious to ask you where specifically you see the demand coming from in coming years and what the use cases are going to be.
Sure, absolutely. Thanks for having me again here on Bloomberg, Joanna. For demand today, the overwhelming demand of ammonia today is going into the fertilizer sector. 80% of the demand goes into the fertilizer sector to produce, the food we eat every year. It has to be applied every year, ammonia and its derivatives. But the future is going to look very different. So we're starting now to see emerging clean energy demands for ammonia. That's going to go into power generation, low carbon power generation, as well as marine fuels, using ammonia as a marine fuel. I mean, the beauty of ammonia is that it has hydrogen in it without any carbon. So it's NH3, nitrogen and hydrogen. When it's combusted, unlike hydrocarbons, doesn't produce CO2. So that's a big area to move hydrogen or to combust it for purposes of power generation or marine fuels.
Geographically, where do you see the biggest drivers of demand coming from right now?
So today it's used globally as a fertilizer, as said, in any kind of major crop producing area as well as in major industrial areas. In the future, with that clean energy demand, we see that heavily going into those deficit areas for low carbon electricity, low carbon power, low carbon fuels. Those end up being East Asia as well as Europe predominantly. They're going to be importing ammonia to use it as a feedstock to get some sort of lower carbon energy source, whether it's on the marine fuel side, power generation, or otherwise in the industrial sector.
What visibility can you give us on the supply side? I know that over the course of the summer, your plants witnessed a few supply disruptions, namely stemming from Egypt because of the energy crisis in Egypt over the summer. What visibility do you have about the profile of the supply and your ability to produce in the next 12 months or so?
No, so where we sit today, we've recovered from kind of that summer deficit we saw on the natural gas side. That was driven by extreme weather, as increasing demand, and also that coincided with the decrease in supply, given some maintenance and supply issues on the natural gas side in Egypt. The good thing is the new Minister of Petroleum, Karim Bedawi, have met, started a few months ago, huge focus on upstream supply addition. And also there's rationalization on the demand side where people are looking to be more energy efficient. And we've done the same on the site. I really commend the sites in Egypt where we've produced a lot more product with less natural gas during that, call it 20% shortfall we saw. So, over the next year or two, we see that normalizing with the efforts on the supply side, as well as some of the energy efficiency targets we're doing on the demand side. Having also added...
you also announced in the press release... Yeah.
Please go ahead.
Yeah, I was going to say, you've announced in the press release that you're going to have a Capital Markets Day in the first quarter. What should we expect clarity from that Capital Markets Day? Are you going to give perhaps a little bit more color on some of your investment plans and plans for potential M&A in the future as well?
Yeah, absolutely. So just kind of to follow on the last question, having ADNOC as a partner is probably the biggest piece of information that came out yesterday with this close. So going from 36% to 86%, consolidating shareholding and having one shareholder in control rather than OCI and ADNOC together. So on the upstream side in Egypt, for example, that's going to be supportive on visibility with regards to natural gas, as ADNOC will be on the upstream side there as well, working with the Egyptian government. For our capital markets day in Q1, it's going to focus on how we can continue to produce value accretive growth with this platform and continue to provide dividends to shareholders. What we did give is a bit of preview yesterday with investors to indicate that ADNOC has announced that Fertiglobe is going to become the low-carbon ammonia platform globally for ADNOC. So ADNOC is going to contribute other ammonia projects it was doing outside of Fertiglobe in the UAE, adding 2 million tons of ammonia production, more than doubling our net ammonia capacity, as well as international projects as well that will also increase capacity. And the beauty of it is, ADNOC's looking to contribute those at cost when those projects start producing. So we don't have to burden our balance sheet until the production date. And then when the production date comes, we do invest in those projects at cost and generate cash flow immediately.
Yeah. Ahmed, it's great to have you with us. Thank you so much for joining us and explaining the strategy. Ahmed El-Hoshy, Fertiglobe CEO, thanks. Now, coming up on the UN's World Food Day, we speak to an organization that's delivered 40 million affordable, nutritious school meals to some of the poorest children in Kenya. The Food for Education founder joins us next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Bloomberg's New Economy Catalyst program has just released its class of 2024, highlighting breakthrough innovators, scientists, policymakers, and entrepreneurs who are contributing to a safer, healthier, more connected, and sustainable world. Our Chief Africa correspondent, Jennifer Zabazaja, joins us now with one of the emerging market visionaries.
Yeah, good morning, Jumana. Thanks so much. Let's bring in Wawira Njiru from Nairobi. She is the founder of Food for Education, of course, one of the catalysts this year. Wawira, thank you so much for your time. So let's just start here. I mean, how did this start from one meal to now the ecosystem that it is today? Talk us through that.
Thanks, Jen, for having me. And what an exciting day also to be here on World Food Day, which is celebrating the right to food for everyone, and especially African children, who right now we are one of the youngest populations in the world. And today, 1 in 8 people in the world are African. By 2050, 1 in 4 people in the world will be African. So huge population growth. Majority of people right now are children. And it's important that they have the right nutrition. So what started off as a passion project because of the simple belief that hungry children can't learn, and the simple reality has now grown. We started in 2012, providing around 25 children with lunch every single day. My background is in nutrition and food science, and I just wanted to do something to give back. Today, we serve about 450,000 kids every single day across the country in 10 counties in Kenya, and we're growing to more countries in the next coming years. Thanks.
And Wawira, talk us through the dynamics of dealing with food inflation in particular. We talk a lot about it, especially as it pertains to currency fluctuations. I mean, how do you keep the prices down for some of these meals, considering a lot of these other factors?
That's a really good question. And one of the things we really think about is, if prices are high for us around the markets, they're especially harder for families who are low income. And we've seen prices go up because of, as you said, currency changes, also because of climate change, droughts, floods. In Kenya in the last 2 years, we've had drought and floods. And what happens is food prices go up, and it means that less kids, less families are able to afford nutritious foods at home. They opt for less nutritious options because they're trying to fill bellies and not really get the right nutrition. They don't prioritize nutrition. And so what we've done is really streamline our supply chain to make sure that we're thinking about where food comes from, local smallholder farmers, buying when it's harvest season. So making sure that we're getting that when, there's harvest that's happening, we get the good prices, we're storing that. We have right now about 40,000 square feet of warehouse space that we store dry grain, beans, lentils, all this nutritious produce, and then distribute it out throughout the year to schools. So that really helps control our prices and make sure that kids are getting value for what they need and what the nutrition they need in the schools.
If you've been able to do that, Wawira, I mean, why is it that the World Bank still projects, I mean, there's millions of people who are still living in malnourished conditions or you know, under famine in different parts of the world. I mean, why is it that you've been able to do this and there's still so many gaps that exist in food systems globally? I mean, what would you attribute that to?
That's a good question. I think, you know, when we think about food systems, there are a lot of components that go into sort of getting food to a plate. And I think what we're really seeing across the world is broken supply chains, broken distribution systems, where we have enough food, we're growing enough food to feed the world, but people are still going hungry, as you said. And so what Food for Education are really focused on is streamlining that distribution chain. So thinking about, you know, smallholder farmers, when they farm, do they have a structured demand for their produce, creating that, and then making sure that it gets to warehouses, that it's sorted, automating those processes so that it's faster, it's cleaner, and then we're able to distribute it out to the schools. And so I think, you know, when we think about global food supply chains, there's a lot that needs to be done in terms of making sure that it's streamlined, that it's reaching those who need it most, and that they're getting nutritious meals, not just calories, but nutrition meals, the right macro and micronutrients. And that's what we need across the continent. We need better supply chains to make sure that kids are able to eat and the population is fed, because we have a growing population.
Right. Then, Wawira, what does this mean for the conversations with governments? Because we've been talking about food for education is mainly in Kenya. How do you replicate this across the continent and even globally? What do you tell governments in terms of their role in all of this?
That's a really good question as well. You know, as we think about our scale across the continent and even our scale in Kenya, we're working towards feeding 3 million kids total by 2030. 1 million of those will be in Kenya and 2 million will be in 2 other African countries. As we're sort of thinking about which African countries to look at and even our growth in Kenya, we're seeing a lot of willingness by government. 70% of African countries already have school feeding budget lines. Now, it's not enough. The money that's allocated in many of these countries is not enough to serve the entire population, but it shows that there's willingness. There's that political will towards school feeding, better nutrition, and better food security for kids. And so as we're thinking about our relationships with governments within Kenya and within other countries, we're thinking about how do we help them make sure that their costs are low, that they're able to streamline supply chains, and they're able to get nutrition to the ones who need it the most.
All right, we have to leave it there. Thank you so much, Wawira Njiru, Food for Education founder in Nairobi and also one of the Bloomberg New Economy Catalysts this year. Jumana?
Brilliant, Jennifer. Thank you so much for bringing us that interview. Okay, we're just going to leave with a quick picture of how futures are trading into the European Open. And of course, the major focus is on the disappointment that's come through from those ASML results. It's weighing on all of the tech industry, including semiconductors, and the handover. European futures seen opening up in the red. But that was our show, Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.